Hey, folks, welcome back to The Pulse. My name is Matt. This is Crypto Heartbeat. And, folks, DeFi needs a bank. You know what I'm saying? Folks, if you want something done right, you got to do it yourself. I think that's what our guest says as well. We're going to do it right. We're going to do it ourselves. Folks, we need the kind of representation in banking that is outside of, pseudo outside of the system, right? We need things that really people that understand crypto, people that have respect for crypto folks and bros like you and me. And that's what's so cool about the proposed Maven Federal Credit Union is many, many, many months ago, we had Mike on to give us a feel for this. I met him in Las Vegas at the PulseCon, and I was really intrigued because the credit union system and basically the way the government set it up is actually a really powerful tool because it's really about us as members. It's a nonprofit organization, which is really cool. But we're going to talk to the CEO, Joseph Lowe, and he's going to tell us about where things are with Maven Federal Credit Union. He's going to share with us, how this stuff fits in. And I'm going to ask your questions. So if you got questions for him, put them in the chat today. But I'm really intrigued by this because I really feel like what we're doing with Texan and what we're doing with Texas, I think this fits into, and there's a relationship there potentially. But this, the credit union laws, right, and the way it was set up and the origin of it, we're going to hear about. And I think it's actually really fits really well with what we're doing in DeFi. Our desire is not to not have KYC, but it's to have banking relationship that understands who we are, we get money in and out, and that it really becomes a community bank versus something that is, driven and centralized by people who don't really understand or respect where we're coming from. Right. We want to be able to transact. And the whole purpose of the Richard Heart ecosystem and really, the ethos of Crypto Heartbeat and all of our team is freedom and sovereignty. Right. Leave us alone. We just want to be able to do things. We'll follow the rules, but we don't want you up in our business. And I think that's something that's really cool about what the ethos of the blockchain is. And, just my personal opinion, stay out of my business, man. So let's get to the chat. Are you excited? The Pulse chain has launched. The bridges are stuck. That means so many people want to stuff money into this thing that it's backed up. Folks, this is a great problem to have. And everybody that's, out there fudding or concerned about Pulse chain, just relax, folks. Just relax. I think a lot of people have FOMO. They feel like they're missing out, man, because they see the price of Pulse and Pulse X and they're like, man, I could pick up so much. And you can't even get money. And you can't stuff money in fast enough. I think there's $26 million sitting in the bridge right now, and people are just trying to stuff as much as they can. It's an exciting time. And finally, it's here, right? After 2 years, the Pulse chain is here and it is live. And of course, this is what we've been waiting for. And so to me, fast forward 24 months and relax, right? Relax. I'm going to continue to DCA and all this stuff as I can get resources in, but I hope you're doing well. I hope you're encouraged, and I hope this is an encouraging stream for you. I think it's really important that we have this conversation and that we have a partner. And it's very possible that the proposed Maven Federal Credit Union is the right partner. But that's what we're going to talk about and get an update today. Sam Kemp is here. He says, been waiting for this update. Oh, yeah, you've been talking about this, Sam. we just keeps getting better and better. Airto, thanks so much, Vinny. Good to see you. T Gray, crypto has and will continue to change the world. There you go. Can't wait for the show. Thanks, Texas Life. Thanks for being here. Gen Hex, what's going on? It's a good day to be for a good day. That's right. CG's worried about the feds, man. Don't worry. We're going to address that. Joseph's going to tell you all about that. Nothing to worry. Ego Foundation. What's up, Katie? I'm good to see you. And the great David Lee. You know, David Lee traveled 7.5 hours to come to my dad's funeral. Even my friends from high school didn't come to my dad's funeral, but a buddy of mine from a Hexagon came 7.5 hours to come to the funeral home and to the funeral. What a guy. Thank you so much, David Lee. I say it every time, but I just love saying it because that's what this community is about. There's more here than just the mad gains. It's about community. Vibra Finance CEO, thanks so much. What's up, fam? Raskino's in the house. Hex Honcho, what's going on? Good afternoon to you. Website looks promising. Yeah, we did an update. I have a video from like 8 months ago, maybe a year ago. You can check out on my channel as well. Davis, I hope the bridge stays clogged for the next month so I can farm. Yeah, you get that incentive token. You can buy yourself some more. Dig in. Rich Liberations here. Thanks so much. Joey Torres, Steve Wright. Happy to be here. And of course, from sunny Santa Barbara. Thanks for being here, Steve Wright. Torrance here. Paul out the 7th. And Scott, good to see you. Hey, Scott, I want to connect with you. I was thinking about you today. I got some ideas on our conversation that we've had. Yeah, you met Mike in Vegas after his presentation. Yeah, that guy's like a nuclear scientist or something. I mean, he's like super, super smart PhD guy. It was very cool to meet him and such a nice man. Let's set the captives free. That's right. Good morning, Heartbeat crew. Colin Turans is here. Extravagant Days. What's going down? Gary Paulsikin, AT, and of course, David Lee with 100%. We have the best community. All right, folks. Without further ado, let's bring in the CEO of the proposed Maven Federal Credit Union, Joseph Lowe. What's up, man?
Hey, how you doing?
I'm great, man. Thanks for doing
How's
that.
everybody doing out there in the comments? I appreciate some of the questions that were already popping up.
Yeah.
I'm excited for Pulse for sure. So I just want to let you know I appreciate the Pulse community, all you Hexicans, and thanks for having me on the show.
Yeah, you bet. You bet. Well, you and I had a pretty extensive conversation the other day, and I'm like, we got to share this with the people. You know, one of the things that, you know, we talk about in this new layer 1 world that we're in right now, we've got ourselves a layer 1 and it's just started. We're 5 days in and we understand that infrastructure is absolutely critical. But one of the critical pieces of this is this fiat on and off. And I think that, you know, I literally just started a new company with a new bank and the bank's like, yeah, we'll do your account, but you know, don't get your hopes up that we're going to do anything with you crypto folks. And I look at that and I'm like, no, I'd much rather be in a community of people who understands that and gives us options. How about we start with your background and then let's go into kind of the history of credit unions so people have a good basis. They know who you are and they know what the whole credit union system is. So go ahead.
Absolutely. So just to give everybody my background real quick, I'm going to tell you straight up, I am not a banker. Okay. I'm not a banker. I'm not a Fed. You know, I've seen somebody say, is it the Feds? Listen, I'm a normal person. Okay. Actually, my background is extensively in insurance risk models. And I've done several startups myself. I've had some multi-million-dollar companies that I've started and built and walked away to my next, venture. So, but I like crypto, right? Bitcoin, Ethereum, as it started rolling out all those years, Pulse. So there's a lot of things as far as my personal interest related to crypto is how we got started down this trail. So that's my background. I'm just a normal dude, I promise.
Yeah. Right. Okay, and tell us about, then give us an example on the backside of kind of the community side of things. You know, what is the community basis for the Federal Credit Union and what is that law? What's the main takeaways that people need to understand about that model?
Yeah, absolutely. So again, I want to reiterate a couple things. I'm following Dr. Mohart, and he's absolutely brilliant on how he can relay this. So basically, what the credit union model is a banking model for the community. It was made or enacted in 1934. It was a direct result of some of the banking laws that were passed in the year before. There was nothing for the people. They were like, how do we pull ourselves out of a depression? How do we get industry going? How do we get small businesses going? How do we innovate and create new technologies to take us in this next period? And they came out with the credit union to allow people to transact and lend amongst each other instead of being held hostage by banks, right? So here we are, fast forward. About 3 years ago, we started on this journey, and we were seeing some of the same things coming. We were seeing that the SEC was coming down on proof of stake models as securities. Staking was going to be at risk. We also saw there was a need for the crypto community to have their own bank. We saw banks were getting more, restrictive over time. And the challenge that we have is this: every time we go to do a startup, we always come to the question, where are we going to get the money?
Yep.
And I thought, as a community, no matter what crypto coin or blockchain you're into, what if we could transact? What if we could lend? And what if we could own our own bank, which a credit union is? It's a depositor-owned bank that's federally insured. What if we could own our own bank and we could make loans depending on what serves our special interest? We currently have no bank. And one thing I want to tell you, and this is something that's interesting, you guys can delve into this later. We don't have an SIC or NAIC code. Okay, blockchain and crypto is not an industry. It's not existent. So when we went to charter the credit union, which we're doing, they said you can base it on a sponsoring group like the GBA, or you can base it on a industry. So you think about the teachers unions, they have their own credit unions and state employees. We asked about blockchain. They said there's no industry code to be found. So are you wanting to be lawyers? Are you wanting to be programmers or developers? So interesting things. So we have no industry, and it helps you understand why the SEC is attacking us, because they don't know what we are and they don't know how to categorize us.
Yeah. Well, the big vision is what attracts me to this, is that
Mm-hmm.
we need a bank, right? We need
Absolutely.
a bank that understands us. But what I like about this model is you're saying, and let's talk about this governance model, because I think this is a real key benefit to this, is that when you think about a credit union that's owned by its members, that is a nonprofit organization that is federally insured, tell us about, what advantages does that provide to depositors, and how does that work when it comes to, everything that a bank would typically do, which there's obviously lending components to that. There's the ability to get money transferred, checking, all those kind of things. What do you see as the main benefits for folks in the crypto world utilizing this model?
Wow. Extensive question. I'm going to try to minimize it if possible, because I know there's time limits. One, when you have a credit union, the government understands what you are now. Okay, they understand how to govern or how to respond as far as regulations. You are a credit union. You're a unified group of community members that want to have your own bank, right? So they understand that. They understand the language. So what it does is, specifically in federal regulation under the Federal Credit Union Act, is it does not allow, it forbids the SEC, in the CFTC and the OCC getting involved and regulating our model, our financial engine, basically, which is, the credit union. The other thing is your deposits are now insured up to $250,000. You can imagine if you own the bank, you now have something like a proof of stake model that can't be touched by the SEC because it's regulated as a credit union. And, there's some details, but for the most part, you own it. So you're going to be friendly to the products you want to be involved in, like crypto or digital assets.
Okay. So help me understand this. Let's say this
Mhm.
happens, right? And all these crypto folks come into Maven,
Yeah.
and it's really successful. Tell me about how, in a practical sense, let's first talk about, I mean, fiat in is easy, right?
Yeah.
Obviously, there's a KYC process, but fiat out is a big issue. And so I'm just gonna illustrate the problems that I've had
Mhm.
with Coinbase. Okay. With Coinbase, the difficulty is, let's say you're sitting on a decent sized amount of money and I want to buy a house, but I want to pay cash. Okay. Well, if I'm in crypto, if I let's say I even wanted to buy a modest house for $250,000, I'm limited by the amount of money I can take out. Now I can go to some pretty shady places and I can pay 10% to get my money out. But
Mhm.
let's say I was sitting on, $500,000 in crypto and I needed to figure out a way. I'm going to buy a house for cash. I'm going to buy a $250,000 house for cash. And I want to utilize my crypto through Maven Federal Credit Union. How does that work?
Yeah, that's a really good question. Good thing is I've actually been studying for the past couple years ready for this question. Here's the thing. What we look at as crypto is just simply digital assets, right?
Yep.
And it would be no different than you would create a liquidity pool against any other permissible investment or any other permissible asset, auto loan, home loan, or a HELOC, right? So where you create liquidity against the equity in your home. It's of the same thing. It's a digital asset. Now, what we could do is, as a credit union, we could create a product through consensus, because that's what credit unions have. They have no shareholders deciding what products you get. You as a community decide what products you want. But say you wanted to create a share certificate like you would get at a bank, but to create for the sole purpose of creating a liquidity pool to back crypto, loans against crypto, right?
Wow.
To get a mortgage, to get a personal line of credit, anything of that nature. So we could create that as a community. The community wants it, and we basically begin funding it.
Okay, so I'm gonna stop you here because you're getting me really excited.
It's
Okay, so
a lot.
I'm gonna say it back to you because this
Okay,
is humongous if it's true. Currently, I cannot buy a house. I can't get a mortgage. Okay,
correct.
I cannot get a mortgage because of my crypto holdings, right?
Hmm.
And so let me just run the scenario. Let's say I have more value, way more value than I want for the loan. And let's say I have USDC, right?
Hmm.
And I bring that USDC in, and let's say, some agreement in this product. Let's say I have to put 110% up, right? Or I have to do some sort of, is there a possibility through the credit union model that actually, rather than converting to fiat and buying cash for the home, that I actually could utilize some product through the credit union, which is actually a loan? So that, let's say I do have an appreciating asset, I don't
Hmm.
have to go to a stable. Is there a possibility that if I over collateralize, that actually this would technically end up being a loan, which would keep me from having to sell my appreciating asset?
Yeah, regenerative finance, right? It's
Yep.
where it's a line of credit for basically digital assets, and that line of credit can be used. It can be maxed out. It can be paid off. It can be reopened, and you are now able to again uh, bank yourself. You can fund yourself, right? So again, you pay it back. You earn the dividend off your own interest because you own the bank,
Yep.
right? The dividends aren't going to anywhere else. And the credit union is a tax exempt vehicle. So all profit is a dividend back to the community members, right?
Wow.
So it's regenerative finance, is what we call it.
Okay. Well, and that's what's so exciting. And I don't people, there's all kinds of tools that are used in crypto,
Hmm.
as it relates to kind of these loan protocols. We see several of them popping up in the Pulse chain. But that's all strictly, crypto. What I think is really exciting about this, and I'd love to know kind of the approval process. So, for example, let's say, obviously the risk here is the volatility of the asset, right?
Hmm.
And what you end up in as far as collateral for the line of credit. And I would assume you'd have to be over collateralized to get a line. Yeah. So if you were over collateralized, what's the process by which something like that kind of line of credit to buy a home or this regenerative finance product is approved? Is that something that there's a committee, a board, a vote? How does it work as far as governance? in approval?
Technology is the best way I can say it. So the concept is, again, and just to kind of give you an update, we're completing our charter package right now. So we're about to submit for charter,
Okay.
and we have to put in the products and services that we're going to want to offer, over 5 years. Okay. And so that is getting put in right now. As far as the technology end, a part of the plan that we're putting in the charter package is this: we need to remove discrimination from lending. And
Yes.
the best way to do that is to automate it based on certain core principles. And in a credit union, you don't have to even have a good credit score to get a loan. Okay. It can be based on assets that you have, like you're describing, digital assets. Some people, cryptocurrency. But you can do that. You can do it based on home lending. You can do it based on personal signature. So once we get post charter, what we're looking at is making a determination that is ongoing as well. So it's not something we can come and bring and present it and it's going to be perfect. It's something we have to scale over years as well, too. Okay.
Okay. That's helpful. I guess what I'm getting at is, right now, if somebody asks us, how is it, is this different than liquid loans? Yes, it's very different than liquid loans. And it solves a really big problem that I've been wanting to solve personally. And I think a lot of people that have resources are trying to solve personally. Even the God whale, right? And the God whale probably, last I looked, had 600 million in ETH, 600 million at the bottom of the bear market in Ethereum. Okay.
Yeah.
He was even complaining that he couldn't get a loan from a bank. He has $600 million worth of Ethereum, and he can't get a loan from the bank. And, I think a lot of people are in this situation, but I do also like the idea that when you think about how the dividend works and the interest works, that you're not going to fiat to buy something. You're actually going to get a loan that actually is going to pay the seller in fiat. And what I really like about this is some of the benefits of taking loans to pay for things versus, and financing them. Even if you are over collateralizing, there's some really interesting things that this gives a ton of people that are almost exclusively in crypto an opportunity to buy real world things, but not lose their appreciating asset. Yeah, it's huge. Thank you, Go Pulse Win. That's why we're doing this stream, man. This is huge.
It's hard to explain. It's such a massive picture. And the other thing, you mentioned USDC earlier. After we launch, understand this: we are going to be in technical terms, it's in none of, stable coins aren't legally defined, or tethered, systems, but they're not legally defined yet. Those are under threat of being securities right now.
Yeah.
You buy Tether, you buy USDC, you could potentially be in a position where those systems become frozen.
Yeah.
And because they're under threat of the SEC right now for securities. The other thing is they're not insured. And you would buy that. So my thoughts are, come to Maven. We're going to have a federally insured stablecoin, right? So the money you deposit converts to shares, and those shares will be issued to you digitally. They'll be federally insured up to $250,000 per depositor. And it's going to be on blockchain. So you're going to have a coin on your ledger to be able to represent your fiat's worth, right? Now your stuff is insured. So, get away from USDC, help us charter, own your own bank. It's your stable coin, right?
Yep.
And let's do this. Okay.
So let me drill down on this. So Scott's asking, they do have restrictions on crypto to back a home loan. That's the problem, right? And so what we're basically saying is, and I want to kind of go to, you still have to have, Maven still has to have the fiat to be able to provide to the seller, for example. But I would assume the deposits of a group. So what I'm thinking, and everyone that's in the chat and all these things, is somebody's going to have to step up in our community and lead, right? And that's what I see as part of my role, and those that get this, is to say, in order for you guys to get your charter, when I talked to Mike a year ago, he was saying, "Hey, we need to get 300,000 or
Mhm.
$350,000 to do this." And this was at the time when there was $600,000 raised in 8 days to put hex on the side of a NASCAR, and that was gone in a race. Okay? When I look at this important thing as banking, meaning my wife's breathing down my neck going, "When are we going to get the new house?" And I'm like, "Well, being a crypto bro doesn't get you a loan very well." And it's like, all right, well, if you can't get it done, do it yourself. And here you are doing this. You've got all of these things in place. You've got relationships with the the regulators. And the thing I want to emphasize
Mhm.
to people is these regulators are defined based on the structure of a credit union. You're not like people don't stick their nose in it. It's already well established how the regulatory works. So when you engage with these things, you're building products that serve the community that you have, and they've got to obviously work. But what I love about this is a stable coin that's insured. So if there's something that happened to Maven, I was reading that a lot of times if a credit union goes under, you get your money back in a couple days because of the federal insurance program on that. But it's different than what you see with typical banking. The big question though that this brings up for me is you have, in order to pay the seller fiat, you got to have fiat within the federal credit union, right? And so the reserves of fiat, okay, I converted my digital assets to these shares, which are a federally insured stable coin.
Mhm.
Talk to me about how the fiat gets to the seller of that home.
Yeah, it's really good. So let's just talk just regular fiat transactions. You put the money into your account, the account converts it automatically, issues a digital certificate to your digital receipt, and that appears as a coin, right? No different than you'd go and buy, say, Bitcoin. Bitcoin issues you a digital receipt. So we're operating kind of in the same realm. Um, the fiat is held in an account with that's also held in like a corporate credit union, which is kind of like a commercial bank for credit unions.
Okay, okay. I did
Yeah,
not know that. So it's
yes.
not based on just the depositors within your single federal credit union. It's
Mhm.
you're accessing a larger
A
pool
larger
of fiat.
network. We'll also be able to have, for some people may or may not like it, but I think it's a positive. We'll be able to have direct access to the Federal Reserve as a community as well. There's a lot of products and services there that you would want in your banking relationships that you're currently not getting. Okay.
Yep.
And that's for another time. However, how does the cash get to the buyer of the house, seller of the house? How does money move, right? Um, you're using your stable coin as is basically a digital form of instructions, and you send it where you want it to go. On the back end, what you're having is the technology is converting what that currency that needs to go out. It communicates it as a ACH or wire. If you're seeing Fed now in some of this ISO um, 222 stuff that's being enacted, basically you're going to be able to move money within seconds and they say 24 hours, but it's moving within minutes now. There's not going to be a need for a lot of things in the future, like your credit transactions. So we're going to be able to move that stable coin into fiat very quickly because it'll recognize it as fiat in the technology. How do we
Okay.
do it with crypto, though?
Yes.
We create a share savings certificate that the community wants. Basically initiate a proposal goes out. Do you guys want to be able to have digital asset backed lending and liquidity pools? Yes. We look at what it's going to take to create it. We implement it. The community funds it. There's now a liquidity pool, and we start taking applications.
Okay. Okay, that's huge. And obviously there's a lot of concerns, academaciated, all of these degens. I love it. I smell the CIA. There's a necessary component of banking when we start talking about this as we interface with legacy. What I like about what you're doing and Mike is doing, and just what the vibe I've gotten from you is,
Mhm.
you want to advocate for folks in crypto, but you want to
Mhm.
use a model that isn't this centralized banking, fractional reserve banking thing. You have access, obviously, through the API with FedNow, which actually converts things into an XML file. That's why, obviously, this is a way better way of doing it. It's like they've waited this long to get into an API for the Federal Reserve, which is amazing to me. But I think the point is, this is a community-owned credit union. It's
That's
not
right.
a bank, right? Banks are
Mhm.
different than credit unions.
Correct. I don't own I don't own Maven. I will never own Maven. I'll own a share in it because I'll have my money deposited with Maven. If you deposit your money, you will own shares. And it's a one person, one vote rule. It is not how much ETH do you have staked. You get to make more rules. Okay,
Okay.
so it gives no favor to the size of your account. It only gives favor to one person, one vote. Okay,
Okay.
you guys own it though. So there's, again, I know somebody said something about CIA. Um, hey, I don't know who you work for, bud, but you're the one that's going to vote and make the rules on how do you want to do personalized finance for this credit union. You would be an owner. There's nothing that I can do. I don't own it. I don't control it. I just wanted to touch base on that because I thought it
No,
was
I think that's really, and that's exactly what I wanted to dispel in this, because I've looked into this model since I talked to Mike, and I'm really thinking it is very useful for what we want to accomplish. Because here's the thing that I also want to drill down on is, let's say PLS, right? So here's this new, core token of Pulse Chain, and it's got value, right? But there are a lot of kind of exotic tokens that have value, maybe not a lot of liquidity online. And I would assume that there's going to be a basket of crypto that is considered kind of credit worthy. Have you thought through this idea to say, all right, what are we willing to convert into? So, for example, you might say Bitcoin and Ethereum, okay, those are more well known, and people understand that value and there's a lot of liquidity. But you might say, well, something that doesn't have a whole lot of liquidity, we're just not going to be able to, we're going to have to discount this significantly, or you're going to have to convert into a known basket. Have you determined what those core currencies that you would accept as, because the big aha for me would be if I could maintain, I didn't have to sell. That's the key to this. I don't have to actually sell my appreciating asset, at least what I consider to be an appreciating asset, to be able to get to buy something,
Mhm.
right? And that's the problem. A lot of people, like in Hex, for example, went up 10,000x in 623 days. And I've talked to so many whales in Hex who said, you know what? I sold Hex to buy a truck, but I sold it at 2 cents and it went to 55. And they're like, I look at that truck every single day and I go, I just spent $5 million on a truck.
Mhm.
And rather than saying I could have utilized a scenario like this where, at least I would have converted into something more stable, been able to buy my truck with a loan and pay that back, and I still hold my appreciating asset. Is that possible? And have you thought through maybe what those currencies are?
Yeah. Yes to all your questions. I'm going to try to answer this really good. So currently, the only digital asset that we know is a definite is Bitcoin. Okay,
Okay.
not even Ethereum. I like Ethereum, by the way. It's just I have to act in the interest of the community versus what my personal interests are. Again, I'm a fan of Ethereum. I'm a fan of a lot of coins. However, we're looking at how do we create a risk scoring. This
Yeah.
is something that the board reviews. We look at in that risk, what is how long has the platform been out? How does it operate? Um, does the do the main people have access to the core of that blockchain ledger? Right. We know there's quite a few decentralized blockchains that the main people have access to the core and they can fork it, which means they
Yeah.
can modify it, they can
Yep.
change it, they can make things
Admin keys.
secure.
Yep.
Yep, they can commit fraud and we would be none the wiser.
Yep.
But Bitcoin, no one has access to the core that we know of. They burnt the keys, they flushed them, they buried them, whatever
Yep.
they did. So we look at that. We look at is it skyrocketing at the moment? We have to be conditioned because we are looking at, even though the bank is owned by the community, we do have to be a little conservative on how fast we approach a digital asset. That's the reality of it.
Yep.
Say 70% of the community says, hey, we want this one coin, Peppy coin or Pulsex or, something of that nature. And 30% says we don't want it. We have to still do a study. We have to know it. Now, the GBA is creating something called a maturity model. Okay. And we do bring that into consideration. Somebody asked about the sponsorship. GBA is our sponsor, but we are independently operating entities. Okay. So just so you guys understand that, but we don't have a solid framework on the exact coins. We have a basic framework. What we want to go to market with currently is based a lot on the Bitcoin model. We understand with like Pulse, there's a lot of similarities there in those features, people not having access to certain things. So.
Yeah. Okay. So, I think, what it boils down to me is you're giving me a way in which I can purchase things without having to lose essentially my crypto. Now, when you say it has to be converted into Bitcoin, that is an issue, obviously. And so, time will tell, right? I look at, monetizing, let's say, mining assets, right?
Mhm.
Proven reserves. People give, you might, or factoring receivables, right? You look at these things, you're like, we're going to have to discount this. You're going to have 300%, collateral on this thing, right?
Mhm.
What I think would be really interesting, and I'm just kind of submitting to you this as something to think about, is if you do come up with that model and it does get expanded out, is that, all right, these are riskier things, they're newer things. However, if you're willing to put, because there are people out there that could put up 500%, they could put up 1,000% collateral. The question is, the issue right now is the banks won't look at them at all, no matter how much you have. You got $600 million in ETH and you got a problem buying a house.
We're interested in looking at it for sure.
Yeah.
Absolutely, especially if the community demands it. We just have to, again, be objective in our review.
Yeah. Well, and I think that that's the thing that would be really interesting is the smart people looking at some sort of table and a schedule that basically says, here are the assets that we would consider. And, there's probably some smart actuarial people that could go, yeah, we understand what this has looked like. And, here's the discount. But what it gives me the option for is right now, even with inside of crypto, this, liquid loans and other loan protocols and all that stuff, that only gets me to a stable coin. That doesn't get me to fiat out. Let's talk about fiat out for a second. Okay.
Mhm.
Let's say I want to buy a boat. Okay. And right now, you would not, well, you already know this, but a lot of people just wouldn't believe. You want to pull over $10,000 out of the bank and they treat you like it's not your money, right? It's crazy how ridiculous it is now to get cash out. If somebody wanted to get cash and they said, all right, I'm going to put money in, I'm going to get this stable coin and I want $100,000 cash. How is that possible with Maven?
Yeah, it's a real good question. Couple things. Maven looks to be a digital connective tissue between a bunch of credit unions as well. It's not, on an island by itself somewhere. What that means is that we have something called shared branching within the credit union community or credit union network. Shared branching means you'd be able to deposit and pull money out of other credit unions that are in your local area that maybe not even be Maven, right? So, and you can deposit or you can withdraw. Withdrawing large amounts of cash, I would think you'd want to go in, not at the ATM, obviously.
Right.
How do we do it? We have Maven, and this is something I told you, on our phone call. Our posture and our feeling towards it is if we're afraid that you're going to pull money out, you're going to pull money out because you're going to be scared. Why are they kind of getting handsy with my money? If we take a kind of a relaxed approach from it, and I'll tell you why. Our model is not based on lending, right? So the credit union model that we're creating, most credit unions, most banks, they're all based on debt strapping or creation of lending. So they need you to keep the cash in the bank so they can continue to lend. And if you pull too much cash out, also known as bank runs, what happens is you get into a depletion of the cash assets that back the loans, and then you have
Yep.
an implosion. We, or, fractional reserve banking, right? Our model is not based on that. So we're more relaxed. You need to pull the money out, pull the money out. The question will be, does a local bank have 100,000 in cash,
Right. Right.
or do
Right.
you need to schedule an appointment?
Yeah.
Do you need to schedule an appointment so they can be heavy on cash that day, right?
Okay.
So I hope that answers your
It
question.
really does. And I think what you brought to the table
Yeah.
that I was unaware of is, for example, there's a credit union just down the road from me. It
Mhm.
may be in the network. And the idea that shared branching is really cool because, Maven may be physically somewhere, but now I've got access to a partner credit union.
Mhm.
If I do make an appointment, I have no issue with that. Like if I know that somebody's not going to sneer at me and ask me why I'm taking out this money, or not even why. I mean, I understand what the Patriot Act requires and all that. I'm not trying to get away with something. I just want my money.
Right.
And that kind of respectful scenario is that if I need cash, I'm coming to get cash, I'll set up an appointment. And if you're saying, yeah, that's the whole point of this, that is really reassuring to me.
Absolutely. Like I said, we don't want to make a bank that nobody wants a bank at. We want to
Right.
make a bank that we all own, and we can finally say, you know what, we can stop looking for the solution, which is how do we get money for our startups?
Yep.
Where can we park cash for this, investment or startup that other banks, soon as it has to do with crypto, killed. As soon as it
Yep.
has to do with, we want to, like I said, we want to be friendly. We are more, instead of being on the skeptical side or thinking you're going to create a product that's competitive, we want to be more on the embracing side, more on the encouragement side of things. We look at it as if we can create a bank finally that we all own, we could create a network as enthusiasts where we can do tons of business development. We could have a whole marketplace of apps that everybody creates. And imagine if I was able to help loan $10,000 to someone in this community to develop an app that
Yep.
could create some of the products you've been talking about on this podcast, right?
Yep.
So it's that type of thinking where let's put our money to work together. And if they don't like us at our banks, let's start our own.
Yeah. And that's exactly what I was thinking too. Well, let me ask you this. You talked about liquidity pools. One of the cool things about this, because the dividends are paid to members,
Mhm.
do I have this right? Let me just see if I've got this right. Let's say I've got capital and you've opened up this, let's say an auto lending or a home lending, liquidity pool. If I participate in that, I would assume members could, is that there's a certain dividend, there's a certain return by providing capital into these liquidity pools. There's actually benefit to you as far as return. And I would assume if I knew that I was if I knew that I was participating at the people that got the benefit weren't JP Morgan Chase, but
Mhm.
was Hexicans, right?
Right.
I'd be much more willing to pay 7% on something than, knowing because I know that the people that made this deal happen were people that were from my community. Am I getting that right or do I have it wrong?
Absolutely right. You have it 100%. Again, the credit union is simply just a liquidity pool
Yeah.
that we all own a cut of, right? We all own a piece, we all own a share, we all own a stake. It's a proof of stake model that will be recognized by the US government through the NCUA, by the way, which is the governing body. And yeah, so we are going to start up with two share types when we start off. The first share type is just going to be a regular savings account, a regular shares account. That's going to be our stable coin, the USD fiat or Euro fiat, something of that nature. The second fund we are going to start is perpetual capital or irredeemable capital, which means that you put money in, which is capitalization or donations, you're not guaranteed to get your money out. And you're like, wait a minute, why would I do that? Well, the rules are this. If you put your money into a regular savings account, I have to guarantee you back that money one for one. That means I have to be very conservative, super conservative on how I invest that money. Lending, maybe some stocks, maybe some treasury notes, anything like that, right? However, if you put money into a perpetual capital fund, that perpetual capital fund does not have the rules. Okay, it can now go buy crypto or digital assets. It can create it can invest money in a mining infrastructure, or proof of staking infrastructure, and we can all split the dividend of whatever the results of that mining or staking is. We can provide different types of loans. Now, what that lets me tell you is, and that allows me to segue into this, is that we can create more share types. So just like you would go to your credit union or bank and become a part of the Christmas club or the Save for College club or the July 4th club, those are just savings accounts on how they invest that money, and they pay you a different dividend based upon how they say invest that money. They know this kid's going to college, they can invest that money longer term, they can lock the money up longer. So we could create, again, a share type that allows, say it's called the hexagon share, right? And based on this share, this is what the money is invested in. It could be perpetual or it could be redeemable. And depending on those rules, we could decide what the interest rates are of loans coming from this share and what the dividend rate is based on this share. Absolutely.
Yeah.
Absolutely.
Well, what's really cool about that is, in a way, it's a backdoor way to do a hedge fund. I mean, if you really think about how I see it, is if you've got this ability to invest in crypto, and let's say, this is members who decide, right? So you've got these different perpetual funds, and I say, hey, I'm a big hexagon. I'm a big fan of this. Well, the ability to, because bigger pays better. So in the hex ecosystem, when you stake, the bigger and the longer pays better. Well, you may not have a lot of money, but if you could participate in a pool through this that actually bought hex, and we're at the bottom of the bear market, and if there was, members who wanted to do that, this is essentially a insured way to essentially have to buy crypto in a pool. But then also there's obviously other things that you could invest in. The amazing thing about the gains from crypto, especially as we're sitting in the bottom of the bear market, is it could be highly lucrative if there are things that benefit from the volume, right? Individual stuff is individual stuff, but I think there's some really interesting things that could happen in that perpetual model. Barry Crumbass, doesn't the independent Texas solve these problems? Of course, the independent Texas solves every problem. But additionally, I thought Richard Hart was considering establishing his own bank. No offense to Richard Hart, love Richard Hart, but in order to fork Ethereum, it took 2 years. By the time he gets around to creating his own bank, I will be probably 6 feet under. And so we have to, as a community, think about ways in which we can do things that collectively help us. Because on one hand, I'm personally interested in this because it solves a problem I've got. But I think I'm not the only one, because I've talked to a bunch of people in the community that have this same problem. And so when I talked to you and I said, hey, how are things going? Where are you guys at? You're like, in order to get our charter, we need to raise 350,000. Is that what it is? 300 or 350?
So the money we have to give, the base amount of money we have to give to the NCUA, National Credit Union Administration, is 300,000. Basically, we stake this money with the government, which gives us insured,
like a bond.
It gives us insured accounts, right? So the more deposits we take, we give them more money, and it increases our lending capacity as well. There's a lot of moving parts, but 300,000 just for them. I mean, what we're trying to do is get by, to create, we have to get the money to create the technology. But we had a discussion with the NCUA the other day, and it's looking really good. How about that? So we have a pretty strong working relationship with them. I'll tell you this: they're a federal governing body and they are excited about the concept of us launching this and getting chartered. After speaking with them, they had pretty good confidence in us. We have more confidence in ourselves now than we had before. They're like, look, if you're shy of the money, we get it. We understand. Keep raising the funds. but go ahead and put in for charter. We want you to go ahead and submit your package. Don't wait till you have all the money first. Go ahead and put it in, and let's get the doors opened. So we can't guarantee it. Obviously, it's the federal government, right? We can't guarantee it, but we want you to go ahead and submit for the charter. Okay. And we'll get through this. We'll get you through it. So they're supportive. I call them a yes agency because they're very solutions oriented. Hey, I'm having a problem.
Yep.
I don't get it. Hey, go talk to your lawyer. He can decipher this for you. We don't get, hey, that's a problem. Too bad for you. They're really like, hey, this is how we understand it. We had our legal counsel inside interpret this, and how else can we help you? So,
Okay.
yeah.
So let me ask you this. Let's say, poof, you've got $300,000 and it goes over to them and you have your charter. Okay.
Mhm.
You can do the basics of a normal credit union from day one, but all of this other stuff as it relates to the stable coin and all that has to be developed. Is that correct?
So day one, we're going to launch with a bare minimum MVP, which is 1.0, and it'll basically be any type of, they call it de novo. You might call it, say, a new bank or something like that, but it'll operate similar as far as the software, the application. There will be some, differences in features and things like that. But phase two, that's when we start launching some of the different products like the stable coin and so on.
Okay. You know what's funny is when I was a kid, my grandfather, who was born in 1911, used to wear Old Spice cologne. Remember the old white bottle? It was kind of stone and had a red thing that you'd pop out, and it smelled disgusting, right? Credit unions are the old school Old Spice, and they did a rebrand, and now it's like power. And I look at this, and I look at this is old grandpa's credit union could potentially become the new crypto, basically framework. Is that how you see it?
Absolutely. Credit unions were the analog Bitcoin or the analog, so credit unions by nature are a distributed ledger, and they were the first ones before. So a lot of people are like, oh, did you read Satoshi's paper and all this? I'm like, you're so far behind. They had this in 1934. Okay.
And wasn't it farmers? A lot of farmers and independent.
It was, people? Yeah. Because America at the time was a lot of people who mined and farmed at that time. And we were coming out of the Depression, or we were in the Depression. We were trying to pull ourselves out. And so this was pre-industrial World War II revolution. Yeah. And so it was the farmers mainly. Absolutely. It was the people. And the government's like, hey, we see you're kind of pulling your funds together. You got a bookie who writes it in the books before Excel spreadsheet, right? Yep. And so they're like, we like what you do. Can you just tell us how you do that, and we'll create it into law, so this way you cannot be touched by other governing bodies like the SEC. Absolutely. And they created it. So credit unions have been around for hundreds of years, to be honest. Yeah.
Okay. So I want to, I've done software development for a long time in my career, and I understand software is hard. Mm-hmm. And when you think something's going to be out, it takes much longer generally. So let me ask you this, kind of in this interim space. You get your charter, because what I'm trying to decide, to be completely honest with you, Joseph, is do I want to go to bat for you? Meaning, do I want to hustle our community to say, listen, guys, this is our opportunity to create our own bank? Because at some point in time, talking to Mike, we could have our own brand. Like, we could birth ourselves out of Maven, and literally it's Hexaco Bank, or credit union, or it's whatever, or even Texas. And I'm looking at that from this standpoint of saying, we're creating value within consensus of people. And wouldn't it be nice if the bank was the same extension of the same people? And that's what a credit union does in my mind. But there's a distance between getting your charter and I've got a checkbook and I can write checks to my creditors. Right. So you talked to me last time we spoke about, there could be something that fits in the middle to say, hey, once we get this, we could use the standard stuff to get you guys up and running. Could I start bringing my small business banking there? Could I bring my, all of my family money? Could I get out of the current bank and be in the credit union from day one? Or is it like, well, no, you got to wait till we develop some software and that could be a year? Tell me about that. Cause that's the thing I think that gives me some pause and some caution is to say, I love the idea of the whole blockchain stuff, but I need some banking, man. Like, is there something in the middle?
Yeah, real good question. The software is already out there. A lot of it exists already. This is so it's not something. It's a in a way we're creating something new, but we're not. We're repurposing, I guess you'd say. So there's already technology out there that allows you to have a mobile banking app. That we have the interface, the UI, and so that exists already. Then you have other systems that are private blockchains or permission ledgers, and they have open source models. Where you can take it and you can just build it.
Yep.
As far as banking for yourself and banking for a business, though, technologically it'd be the same thing. It would just be a different number. As far as the EIN versus social, and it'd be a different name, your business instead of yours. Creating family accounts will probably be phase 2. Phase 1 will be individual accounts.
Yep.
However, we have a survey, and we need, to submit this charter, we need about 300-400 of them filled out.
Yep.
And on this survey, it lists a bunch of products, and it gives you the option to put your word in on maybe products we didn't list.
Okay.
Based upon that survey will tell us what products to release over a timeline. And this is what we tell, the federal government, expect this product at this date around this time.
Okay. That's super helpful. Carster, I agree with you, Carster. Very interesting to have a credit union, but I won't sell my Pulse for Bitcoin. And I agree. That is a concern. And that's why I think that this creativity and being able to think through this stuff together is to say, if you do this right, Joseph, this could be a massive opportunity, right? Because if in fact there is something that is, regulated appropriately and kind of partitioned off from, the traditional banking world and the SEC and all that stuff, and it's a known model, but then the creativity is, all right, how do we deal with alternative assets? Because one of the things that we're seeing right now in these loan protocols, especially on Pulse Chain, Liquid Loans is enabling you to take your Pulse and stake it, put it into a vault, generate USDL, which is the stable coin there. You're able to stake that for yield. And so it's all in this internal, protocol. But that doesn't touch fiat ever. What I think is the innovation here is the fact that for the next at least 5 years, we're still dealing with fiat, folks, and people are still expecting to get paid in fiat. That this to me is kind of that bridge, if you will, between where we are today and maybe in the future we will be just doing straight digital. But there's a real need right now, and I'm not feeling very well served by my bank, especially when it's things like, for example, Carster does a great example. I won't sell my Pulse for Bitcoin, but do you want to buy a house? Because right now what'll happen to me is I have to sell my Pulse, which I don't want to do. And so it forces me into leasing my home right now. But if I want to buy a house, I'd have to sell my crypto, take it into, an off-ramp like Coinbase. I can only get $10,000 a day out. I'd have to do that every single day until I had 500 grand. I'd have to pay that cash, get a cashier's check from the bank to be able to pay off and pay cash for a house. So the question is, I don't want to sell my Pulse for Bitcoin either. I agree. But at the end of the day, I want to find a mechanism where I can actually get a loan and maintain that appreciating asset. You can't have every single coin represented, and everything is not the same risk level. But if you guys can figure out what this community values as, quote unquote, the holding of an appreciated asset, I think there's, even if it was, like I said, you have to have 300, percent collateral. Fine. I'm cool with that. I just want to know that I can actually buy this house and not have to lose that appreciating asset of Pulse, for example. So I know we don't have an answer to that right now, but that's kind of
Right.
where I'm at.
And let me clarify something. Nothing I said about Bitcoin being the first digital asset that we experiment with was meant to convey that you have to sell Pulse for Bitcoin. Like there's an exchange between them in order to get into it. We work in the fiat on off ramp and providing specialty products there. And Bitcoin is one of the first. Now, what I had stated earlier, and I want to make this very clear, is that if and we are open to it, we want to hear is making a case for Pulse and creating a liquidity pool against it. We can create a special savings or share certificate and define and outline in creating liquidity against Pulse tokens, right? Or Pulse X,
Yep.
right?
Yep.
So and I just want to say again, there's nowhere I've implied or want you guys to think negatively in any way that I want you guys to sell Pulse for Bitcoin. No way,
Okay,
no
good,
way.
good,
Absolutely
good.
not. We want
Good.
to figure out how can we create a product that serves this community,
Yep.
right? And when I was saying the first digital asset that we are bringing into consideration is Bitcoin because it was the first asset, right?
Yep. Yep.
But we're not even considering Ethereum. So if we're made of hexagons and people who hold Pulse and the community wants Pulse to be the next coin we consider,
Yep.
then the community gets what the community wants because
Yep.
that's how the consensus model runs.
Well, and I think that that's where Hex comes in. When you think about, Hex is a layer 2 that inherits its security model from Ethereum. So that's a wonderful thing. It's immutable. There's no admin keys. Now you've got the OA issue, but that's another conversation. But I think what is incredible is, all right, what is the risk assessment of Hex as that collateral and what's it going to take? And I think that if you create a framework, right? And I'm just spitballing, but I would look at liquidity. I'd look at length of how long has this been around. I would look at all of these factors and I'd have a grading, and anything could be passed through this grading. And so, all right, you can hold this token, but you may just have to way over collateralize in order to get this loan. But the value to me is the fact that that Hex doesn't get sold on the market. And
Right.
that to me is like that's the thing I'm trying to solve here. Because I understand in crypto not selling that asset and getting a loan against it, but I got to get the fiat because my wife needs a house. And that's, whether you get it or not, and you may not be in store for it, you need this solution. And if we can influence how it's created and we can own it ourselves, I would way prefer paying more interest knowing that hexagons are getting the benefit rather than the feds. So I love it personally. But I know that we don't have all these questions answered, and that's kind of where we find ourselves today.
To get and the thing is that even if we did have the answers, and we have a ton of answers for you guys, we couldn't fit it into one show. But here's the thing: is you got to ask yourself, am I playing in crypto? Am I playing in digital assets? Do I have a bank account already in anywhere, whether it's my own credit union now, right? Is it at Bank of America, Wells Fargo, whoever? Do I interact with an exchange like Coinbase, right? You're having problems with Coinbase. A lot of people are having problems with Coinbase. Getting money into Coinbase from a jealous bank and getting money out of Coinbase from a jealous Coinbase, right? Not wanting it to go. Everybody wants to hold your assets. So, the credit union can evolve into an exchange as well of peers. Okay, a decentralized or a distributed exchange. There's a potential for all kinds of things. However, again, we have to start off with, we need to be able to put a bank that you own on an app on your phone in your pocket. From there, we can start what we're looking at doing is we want to come out with a blank slate and some tools. And we want to hand the keys over to the community, and the community can issue the surveys or the initiative proposals of how they want the credit union to evolve. So if you want to split off and create, again, a Texas only credit union, we will be more than happy to be that crowdfunding platform for you. But we've got to get the first credit union up and running. And I'm telling you, in 5 years, less than that, but I'm trying to be positive. In 5 years, you will regret if you do not help get this credit union off the ground.
That's how I'm feeling.
Yeah.
That's how I'm feeling too. So look, here's what I would say to those of you who are watching or do watch this. One of the things I'm personally considering doing, just with the little bit of influence that I have or Rags has, and what we're doing with our team is, I remember when the Hex NASCAR came out, and there was a group of people. I think Motley led that, and Motley went around and went on people's streams and said, "Hey, we need to be doing this." And $600,000 came in 8 days, and they got the NASCAR thing. That's long gone. What I'm trying to evaluate, and this is really for Hexicans and Pulsicans and Pulsexicans and Texicans and Ophirians, all the people that are in our community, is this something that we want to rally around? When I look at 300 grand, to me, it doesn't represent a whole lot of money. I mean, potentially there's people in this chat. Now, we are sitting at the bottom of the bear market, and a lot of people are excited, and we're just beginning with Pulse Chain, and a lot of people tied up a lot of resources there. But one of the things that we've seen, Joseph, is we did what's called a donation phase. Okay. And so I consider this to be an innovation. And I'll give you a little bit of backstory. When Pulse Chain first was the sacrifice started, Richard did something, because I've been in the nonprofit space all my life. I've raised money for nonprofits for 23 years. And he came out and he said, if you give to the SENS Foundation, and the SENS Foundation was a registered 501c3 charitable organization for longevity research. And he said, if you give to them, we'll give you 75% of the points towards Pulse Chain. And I was like, this is incredible. People know, and we went to our attorneys, we launched the Texan token, we're launching Ophir here coming soon. And our attorney said, you can't do a sacrifice because ICOs are illegal. You can't do them. Mm-hmm. But people understand what a donation is. A donation is very clear to a nonprofit organization. There's plenty of case law as it relates to when you give a donation to a registered nonprofit organization, it's not your money anymore. You've given it to them. Well, that's how we went about raising capital, not raising capital, but we advocated for a nonprofit. And so the nonprofit that we advocated for was the Texas Nationalist Movement. It was a C4. It was not tax deductible. In the Philippines, it is a church network organization that is a nonprofit, and 100% of the money goes to them. What we did, and this may be something that we talk about, and it really just popped into my mind, is that if we were to issue a token, right, that was for this, let's say, and this could be separate from Maven, but we were to say, all right, anyone who gives to get this, the goal is $300,000, but there's no limit to how much you can give. They're a registered organization. None of the money comes to, folks like us, but that you would receive some sort of Maven token. And that Maven token, if somebody wants to provide liquidity, great. If they don't, but the point is there is a no value, let's call it Maven token, that is a premium for giving to get this thing started to a registered nonprofit organization, which is the Federal Credit Union. You could have the money overnight. And I think about that and I go, well, how do you utilize this blockchain functionality with essentially an innovation in fundraising, because that's what you're doing, that would give people an upside long term? Because what is all this about? Kickstarting something that could serve an enormous population of people and could spawn other, solutions for Texas, for other people, at least in the United States. How does that sit with you? Is that something you've considered?
Absolutely. So Maven will have its own internal token called MFX. It's a digital receipt, obviously. And so we have, again, what we're looking at doing is, since the community will drive this credit union, it's yes, definitely we can have a Hexican credit union. Reserve the name today. Yeah. But yeah, so what we can do is with the credit union, since our model is not based off lending to fund itself, and then you debt strap it, then you bankrupt the credit union. This is what happens to a lot of startups in the credit union, the banking space. They bankrupt themselves by overextending. Is we're going to be creating a transactional model, no different than any blockchain platform, Pulse, Ethereum, Bitcoin. They're all based on peers transacting, smart contracts, smart chains. You have all of that, right? So basically, we're going to have a transactional model that has a transaction fee or gas. Okay.
Okay.
The Maven or the MFX is what we're calling it. The Maven coin will be able to pay for that gas, is the plan, in order to power the credit union. So that way we don't have to pay a bunch of people to come on staff and look at your accounts all day and move money for you.
Yep.
So,
Well,
and
have you considered? I mean, I've been seeing these things pop up all the time. Is even since the last Maven conversation
Mhm,
is blockchains as a service, which is more of a private blockchain solution that runs on, it may be a Polygon backend, but
mhm,
basically you are able to almost like AWS is
mhm,
that we want to have our own, private blockchain. This seems like what this represents to me is that this isn't some public blockchain. This is a private blockchain. You've got the gas fee. This is the token. So that's interesting. But the big question I've got is what benefit is it to someone who donates for this $300,000? What is the benefit? Knowing that you helped start it and that's just a good feeling? Or is there something else that could be done to say, hey, there may be an opportunity here for us to provide some no value? That's where I look at ourselves is how would I go about raising money for you? I'd create a Maven token that is not associated in any way with the credit union. I'd say, we as partners want to give it to whoever gives to you. No money comes to us. We'll just give you this token. Now, it's zero value. But in the future, somebody might provide some liquidity on Uniswap and it might have some value. You get the money you need. They get something that might be, valuable in the future and it tokenizes a community. You get your money and they get something that might have value in the future, but it's zero value now. That's outside of your current blockchain solution. That's
mhm.
not transactional inside of the federal credit union, but maybe a way in which you could raise some capital.
I'm open. I'm open. Absolutely. If we wanted to run something that's parallel,
Yep.
so you get your gas fees for inside the credit union. If you want to run a separate token that is connected or tethered to us in some way, I'm
Well,
open
and
to
what we've done, and I'm kind of just doing this out in the open here publicly, and I think
it.
it's
Mhm,
fine, is because our model is completely transparent. What we've done, and this is based on our attorneys, is we tokenize communities. That's what our group does. Well, the
mhm.
first community was 500,000 people, which is the Texas Nationalist Movement. They've got 500,000 members, and they care about Texas independence. We said, as a third party organization, we're going to create the Texan token. The Texan token is like any other token, ERC20 token with staking and scraping functionality. But we said, we want to come alongside you. And to promote your fundraising, we want to give just like a t shirt or a hat, but it has zero value. We're going to give this token to anybody who gives to you. Oh, that sounds wonderful. But guess what? You get a bunch of the token too, meaning the organization of the TNM holds a bunch of Texan tokens that we gave them because they were our partner. We retained Texan tokens, and then all the people who gave received Texan tokens. And
Wow.
then we airdropped free Texan tokens to anyone who was a Hexagon, Pulsegan, or Pulsexican if they wanted it. And so we have 20,000 holders now of the Texan token because we did that model, and $1.5 million was given to the TNM. And it's like
Wow.
they got what they wanted. People then, we birthed something in that process where it gives people essentially they have skin in the game. They're like, oh yeah,
Mhm.
I own a part of this thing, even though it's not directly tied to the TNM or that nonprofit. They feel tied to Texas independence, and so we've got people across the world who are like, I'm a Texan, and this guy's from Norway. And he's like, why? Because the
Awesome.
story is, I believe in independence and sovereignty, and to me,
Absolutely.
I see this as the potential of I don't want to do credit union stuff. Like I have no interest in running a credit union. I have no interest in all of that. But what you're providing the framework for is I see a future where there is a bank of Hexicans, there's a bank of Texans, there's a bank of these things. And it could be all across communities in crypto where it's the XRP folks or it's the SHIB people. They have their own community, they see their own things their own way, and they can have their own branded credit union. It provides very important things for crypto people to get things done in the real world. That's how I see it. And now I could be like, naive.
Yeah. I think you're spot on. To be honest, I was going to ask you if you wanted to join us on the board.
Let's do it, man.
Yeah, you don't have to
Yeah.
run the credit union. You're going to be on the board.
Well, and you know what I love about this though is, the vested interest, right? Stakeholders in anything, shareholders. You want to be somebody who, I think if you guys can be successful, this is something that everybody reproduces, because we can't completely say, I guess I could hole up in a cabin in Wyoming and get a bunch of guns and never go out, but I can't do that. I got a family and I got to operate in society.
And they
Well,
never
there's a
end.
necessary part of this. I'm going to live in the United States for right now until Texas is independent, but still there has to be rules. I'm not trying to get outside of KYC. I'm not trying to be anonymous. I'm not trying to fund the North Koreans. I just want to get a damn loan so I can buy a house. That's it. That's like really my main thing. And no one's willing to listen, and you are. And so, folks, here's what this is kind of the call to action piece. If you're interested in knowing more, or you want to be a part of this, and you're somebody that has the interest, they're looking at raising $300,000. I'm going to be talking to Joseph more offline about how we can go about helping them raise this 300 grand. I think it could be raised in 10 days or less if we were serious about it. So we'll work out those details. But if you want to contact Joseph, you want to become because you can become a member now as the proposed, right? There's a way to do that. You can fill out their contact form, and I'm going to put it up on screen here. So founding subscribers here. And actually, I'm going to go to the contact button, guys, and fill out this information. Just say, hey, I saw you on the stream with Crypto Heartbeat. I'm interested. They'll obviously get back to you. And then I want to get your feedback, folks, from the community. I got a lot of stuff going. We're busy. However, I see this as critical infrastructure. And to me, I might take a poll on Twitter as well. But I want to know, what do you feel about should we take a little bit of our effort and represent and push forward to help Joseph and Maven get this thing off the ground? Because I'm convinced that it would be helpful, but I want to make sure that the community is behind us, because I don't want people saying, man, you're just trying to scam. We're not trying to scam you. I'm just trying to figure out how I can get my damn money. And I think a lot of people are in that boat. So reach out to me, Crypto Heartbeat 22 on Telegram. You can DM me on Twitter. Let me know how you feel about this. Put it in the comments, whatever it may be. But go to the contact form if you want to talk directly with Joseph and his team. And then let's continue talking, man.
Absolutely. Yes, sir. I'm so happy you had me on today. I look forward to be on again. I know Dr. Mohar, I think he's in the comment section. He looks forward to being on here again as well. So I'll probably end up sending you a link if that's okay.
Yeah, sure.
For the surveys. We definitely need the surveys in. Listen, we want to know what you guys want in a bank. Okay. That's all we want to know. We want to know, what is it that you want? Everything that we discuss here today, Matt, and the community, fill it out on that piece of paper. And that's how we make this real. Okay.
Well, just like I said before, it's like Old Spice is getting an upgrade, baby.
Mm-hmm.
That's right. Grandpa's old musty Old Spice is going to get an upgrade. But I appreciate what you guys are doing, and I'm a huge fan of Mike's. Mike was an awesome representative for you guys in Vegas. It was so cool to meet him. Let's continue offline. And folks, if you got commentary about this, let me know what your thoughts are. And if you're somebody that has the means and resources, also contact me, because that may be an opportunity that we can talk directly with Joseph about to be able to get these guys their charter. Because I think once you get your charter, we're off to the races here. But thank you again. Anything else you want to share?
Go to mavenfederal.org, guys. Let's get the bank. We own it. All right. Let's be friendly to ourselves. We got to do what we need to do. Let's get it done. Go Texas. All right.
All right. Yeah. Thanks a lot, Joseph. I appreciate
it.
You too, man. All right, folks. Yeah, you're right, Vegas Piper. P Maven smells better than Old Spice. Isn't that the truth? Oh my gosh, that's great. Urban Productions, yeah, let me know what you're thinking. Sam Kemp, thanks so much for being here. The only one. Texas like Mexico, and Hexas is a state of mind. You know what's really cool? Scott O'Shaughnessy is here. I always want to use an accent when I say his name. We're actually having a conversation with, what if there was an actual physical place called Hexaco? And I mean like real place, like with like sand and, palm trees. And this idea of banking, all of these things have to be there, this infrastructure. But I think what's so special is this community, right? That's what makes this special is us. And that's why I'm attracted to the credit union model, because it's owned by us. But, I still have this like, there's a gap here for me personally, which is to say, um, how far from them getting their charter to when we actually have some services that benefit us. I'm okay with having to wait as long as we know that we can get out across the finish line. Nobody wants to invest in something that kind of goes half the way. And so, yeah, I want to know what you think. I'm going to continue to have conversations with Joseph and Dr. Mohar and really investigate this, because here's the coolest thing. And this is kind of the pie in the sky vision. Imagine that you can use your hex and it doesn't get sold as collateral, and you can buy a house right through a credit union that we all are a part of. And how awesome would that be, right? You utilize this means, your hex doesn't get sold, and you can buy stuff, and you didn't feel like, oh man, I bought that house and now hex went up to $1 and I bought this house, I had to sell hex for it. No, no, no. In the real world, how could we leverage the digital assets we have, even if we have to over collateralize? That's a massive win for us, because it's one thing to have it in a loan protocol online and get more crypto. But the real key here is, everything I go look around, people are asking for fiat. And I know that's not going to be forever, but we need something like this. DeFi needs a bank. Folks, thanks for joining the Pulse today. My name is Matt. This is Crypto Heartbeat. Take care of yourself and don't mess with Texas. See you, everyone.